buy Bitcoin with breathe air. There's no second best, okay?
GM. Breathe air. So, Bitcoin is going to fucking break down and go straight to zero, and it's never going to bounce, and everyone should panic. Obviously not. Don't panic. So paths I see. Honestly, if Bitcoin breaks below these lows, I think likely we just see continuation, and we see no major bounce until probably, I would guess, the most important levels at least are these levels here. Not this fucking thing. Fuck that. Give me the line chart. The weekly level at 55.8. So that's a weekly close and also weekly structure. I'll just say weekly market structure. Obviously losing this level here is, is kind of an immediate breakdown risk. You've got the 50-week EMA below, obviously. So there's a level that is certainly one to keep an eye on. 50-week EMA. And then we have that just 53k area, which is basically the same level. 54, 53, because when you go back into here, you've got this weekly order block that price came down into before, which has already been tested once, which could get tested again. And now, if we zoom in, back to our 1 hour chart, and we look at the lower time frame. So you got your levels below, which you probably need to drag them across a bit. Here we go. If Bitcoin, fuck that, man. Maybe go to a 4 hour chart. Here we are. These are some of the downside levels that I see, that I'm looking at. And the strongest support, the area that needs to be retested, the fucking untested zone from the way it moved up, it's all the way back down there. So how do we actually get there? That's the $1 million question, or the $53,000 question. And there's a few different paths, right? So either you see it break all the way down and you don't get that move back up until later, which is what I mentioned before, which you basically see price just rolling over, right? It chops around and you have a few days of chop around here, and then it makes its way down. Finally, everything gets super bearish. Then it comes all the way back up and squeezes people, right? And you have this retest point. And if that's bearish, right, the 58k pivot, remember, is like the most important level on the chart for us on these lower time frames. And so if it goes lower, which it is certainly looking like, we had a false breakout, we had a move down, so you've had an impulse lower, you've had a sideways correction. It looks like at least one, if not two more legs are to come. I mean, just based on price action, that seems to be what we're going to have. And so it would be the case that you are, if you zoom out and you imagine this as a higher time frame trend leg, okay, just like this one. Here was the start of the trend, impulse lower, correction, impulse lower, correction. And so we're going lower and lower and lower. These are all new legs to the trend. If you take that from top to bottom, where did the retracement end up coming to? Right back up to 0.618, 0.75. So it was a bearish trend leg, but it retraced all the way back up after people got too short. So if you imagine that this trend leg started up here, right, at the top, get fucked. We're currently at this point. I think there's at least one, if not two more legs to come. So if you imagine there's one more leg and we stop there, your retracement targets are like 59 or 61, right? Which would actually be more of a bullish shift, which seems unlikely because it just doesn't suit the structure. If it goes back to support, which seems more likely, right, back down and just retest. Even then, if it's bearish, where does it come to? It comes back up into this area, back to 58, back to 59. And even if it's going to go to zero, which obviously I'm exaggerating, it can come all the way back up there. So, just to remind you, there's two ways to trade this. If you're trading it, at this point you're trading momentum. This is probably not the best place to enter for a higher time frame swing or position trade. This is more like momentum. If this level breaks, you're looking at 55, you're looking at 54, and you're looking at the lows anywhere from 50 to 52. Those are like your areas. I've said for ages that there's no If we lose the 58k pivot, which is actually 58.3, which we are losing currently and have lost on the low time frames, if we lose that level, there's not a lot of support until 53. Has been my opinion for quite a while. So if you lose this area, there's not a lot of support until this area, which is the top of that weekly order block. And in between, you do have some interim levels. Like I mentioned, you've got the weekly market structure level of 55, and you've got the weekly 50 EMA. The 50 EMA on the weekly has already been hit once. So I wouldn't expect this to, especially if you come back and revisit it after a shallow bounce, don't expect this to do that much, right? It can absolutely, there'll be automatic reactions off it, but it's already been tested once. So the second test, if it happens, wouldn't be something that I would be like hanging my hat on for any kind of bullishness. Now, as we get to these lows, if you're looking to trade this tactically, it's also going to induce a lot of shorts. So one thing I could see, if it takes these lows out, you could see a sharp rally to squeeze up some of these shorts into this area here. For that, you're looking at the monthly open, right? So basically, since this morning's open, it's dropped with no bounce. And if it takes out all these lows, you might see a sharp squeeze up back to the monthly open, or even above it. So if I was going to trade this, if we see like an impulse candle or a breakdown or breaks through, absolutely, I will continue to trade the momentum. Any trades I take will be in day trader or swing trader channel, as always. But the strong bounce, which I would prefer, is either from here or from lower, where you see a strong bounce up, it goes above the monthly open, it takes out a bunch of these highs, it squeezes anyone who's panicking and shorting, and then you lose that monthly open and you show weakness again, right? That's where you see a couple of break of structure like that. Around here would be your best re-entry point. You'd have seen the squeeze up, monthly open is here, the 50 EMA is there, it fails to get above them, it basically just takes out anyone who's shorting, panicking and shorting here, at this late stage, and then that gives you a re-entry. The problem with that is you might not get it, because of course in a bearish market that's just breaking down and there's too much offside positioning, it might just keep going lower first, and we might not come back to that level until here. I do think we come back to this area, to this monthly open, to this level, even if bearish. Question is, does it happen on a squeeze in the next day or two, or do we have to go lower first and then come back later? Who knows? The market is chaos. Whatever you think is going to happen is probably not going to happen. You have to prepare for different outcomes. You have to trade, manage risk. You know all that, right? So, while it looks bearish, when I say looks, I don't mean, I feel like it just feels bad. No, it is bearish. The reason it looks bearish is because it's broken down. We're currently in a downtrend, right? The impulse is here. The correction is sideways. We're losing the pivot. If we lose this level, this is continuation. As long as Bitcoin stays below the 50 EMA on the 1 hour, this is a continuing downtrend. If it loses, right now, technically, it's going sideways, right? The lows, the lows, the lows, the lows, they're holding. So this is not, there is no continuation trigger here. There has to be another breakout, which is why I'm saying if we take these lows, and it seems pretty easy for Bitcoin to take these lows from here, watch. Does it break and hold, or does it fall back or push back inside? That will give you your next trend direction, lower time frame, and it will set you up better for your next positions. The last thing, it's all like, a lot of people are kind of exasperated, like, how gold's so strong, stocks are so strong, how can Bitcoin be so weak? It's telling you something, if it is. Simple as. We don't know yet why. Maybe the whole bull market's over. Maybe it was all just a retracement bounce. Maybe crypto isn't going to follow stocks. Maybe crypto's not going to follow gold. I'll talk about all that in monthly preview. Or maybe Bitcoin is just washing out people, right? And it's truly just lagging. And don't worry, it's soon going to catch up. The problem with that is pretty much everything is bearish. From trend direction, right, to the bands now, which have finally crossed. We've lost our daily trend, which have been in since October of last year. So 1 year long, well, slightly less than a year, 10 months, 11 months, daily trend. We threatened losing it here, reclaimed it. Now it's gone. 50 below 100. And they're heading towards the 200. The 200-day moving average, which everyone talks about, except when it doesn't suit their bias. 200-day moving average. Tested it. So lost it. Tested and rejected. Got back above it. Lost it again. This is not what bull markets do. Okay? People look back and say, but last summer we lost it too. I was like, yeah, but that wasn't after a parabolic trend. That was in a recovery year. That was basically in a range with a little trap. Since then, Bitcoin went up 3x. And we had 18 billion of inflows into ETFs. And we had everyone come back in. And everyone's fucking mother and dog and neighbor's cat are all long Bitcoin. The problem with that is you have this heavy overhang of supply where we lost it once, reclaimed it. Lost it twice, retested it. Reclaimed it again, lost it again. This is bearish. I don't know what more to say. 2021, we lost it, reclaimed it, lost it, retested it. Until you get back above, right? Until you actually clearly get back above and hold. It's just not a good place to hold risk. And I want you to understand, like, this isn't even about daily trade of the day or whatever, but let me just do one last thing. The same reason when I said a few weeks ago that I sold my Bitcoin at 63, it was because I had an easy invalidation to get back in. Okay? And you have to think about what could happen. When I sold at 63 over here, my invalidation for selling, it wasn't a short, but when you're looking at selling it, right? So my invalidation for selling was, if I get back in, I'll probably get back in at 65, right? If it reclaims. So I sold here. I was like, well, if it goes back up there and reclaims that previous daily high, I'll just buy back in. And the downside was the crash that happened. The downside was it could go all the way down, and it did. So the downside was 20%. The upside, I would have lost, in air quotes, 4%. That's a good way to protect your risk. Now, you know I don't even care about bull market or bear market, so I'm going to preface with that. I don't know if it's a bull market, if it's a bear market. Frankly, I don't care. I think that Bitcoin is going to $500K to $1 million in the next 10 years. What is it going to do in the next year? It can go down. So, if you're still thinking about it, well, I see no way that if Bitcoin reclaims the 200-day moving average after losing it twice and gets back above towards that 66, 68, I see very, very unlikely that that could somehow be bearish. I think that is absolutely a trend reclaim and we go for the highs. So if you were still thinking about, okay, where is my risk to reward if I wanted to protect my portfolio? You could sell there. You could get back in at 65. The reason you'd be doing that is because just imagine, for whatever reason, it's all over and we go back to the 40K, ETF lows, or we, in a worst case scenario, goes all the way back down and fills in this whole gap of the rally we had. Your downside risk, so the downside movement, has potentially 50%, 30%, even just back to the lows is 13%, right? And if you're doing that and you're wrong to sell or short on a higher time frame or whatever, you're losing 12%. So you might sell your Bitcoin at 58, but you buy it back at 65. That's not ideal. The one at 63 gave much better. 63, 65, that was much tighter, but you don't really get a chance to have tight invalidation here. What you're looking at is, you have to game out a scenario where Bitcoin, for whatever reason, maybe the economy goes into recession, maybe the fucking Kamala Harris gets in, we don't know. The market knows more than we do. Let's just game out a plan where potentially Bitcoin goes down for another year or two, and it's actually 2025, later on 2025, where it gets bullish again. It does all this, and then middle of 2025, it just starts fucking mooning as the economy crashes, but they print shitloads of money. So imagine you're right about direction, you're just wrong about path. And the path actually goes down a lot more first. Everybody fucking gets out and panics and they're done and they're dead. This is not a call to short this. I think shorting this makes no sense. I'm talking about, if you're looking at protection, what would happen to altcoins if this happened? What would happen to meme coins, right? Any of your other coins if Bitcoin did this? Everything would get crushed. The market would die again. Everyone would say, fuck crypto. Crypto's dead. Fuck it all. It's all gone. And capital preservation is the name of the game. Crypto is about protecting. It's about protecting your downside risk. The only way to do this is if you have a clear idea of where to get back in, right? That's all it is. It is not, if you choose to sell or short at any point, it does not mean that you are suddenly a bear. Don't become one of these people who sells their Bitcoin and then becomes a perma bear. There's people who did that when Bitcoin was at $10, $100, $1,000, and they could never get back on board because they just simply didn't set an invalidation. They nailed one good trade, and I've seen this like a bunch. There's people who sold their Bitcoin here, right? And they saw this drop off, and they saw that's a lower high bounce, this is bearish, and they sold there. And they sold all their Bitcoin. They maybe were long, and they held it all the way up and sold there. And they're like, I'm a fucking genius. And then they were a genius for about 3 months, And it went higher, and they're like, it hasn't hit the highs. Then it hits the highs, and like, it's weak breakout. Then it pushes up, and they're like, not yet. And then it crashes. You see, I'm right. And then boom, 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 and then there's a bear, and they miss all that, and they can't get back in because their brain is tied to being a $650 Bitcoin where they sold, and it never goes back to 650. The low of the next bear market is 3K. It's too high, and then every time it goes up and down, this derangement is very real. The way you avoid that is, first of all, think about where am I wrong. If I was to sell here, where am I wrong? Where should I get back in? I've already shown you the lower time frame. Lower time frame would be like a reclaim of the 50 EMA, right? So where you're wrong on a lower time frame idea, it's like here, basically getting cleanly back above, and really if you want to hold it about 60, that's where you're wrong on low time frame ideas. And then higher time frame, if you were to get out, you'd have to say probably the 200-day moving average, right? So protect your capital. I remember saying this to people, and I'm not saying this is 2021. Fractals don't play out. It's not the same thing. But I remember saying this to people over here when we had this really bearish phase. We lost all the levels. We had a false breakout. Came back down. It was like that. And it was November. It went into December. And we did a video, me and the other profs, and we said, it's probably over for now. The Fed have said they're going to raise rates. The party seems to be over for now. And I said, zoom out and think about 6 months from now, where is it more likely to be? And 6 months later, you go forward to like May, you're way lower. And you might not be. You could say the exact same thing over here, right? Maybe it's going to go all the way back down, and maybe not. But if not, where's your invalidation? We'll get back in, wherever it reclaims. You have to be okay to get back in higher. That's fine. If you're not going to actively manage your holdings, then you're putting yourself at a big risk. But if you're if you're just like long term, you think, I think this is all noise long term, and I don't care if Bitcoin goes down a bit and spends a few weeks or months like it's going sideways and then goes up, that's fine. Like if your long term plan is just stack Bitcoin, great. I'm more talking about especially altcoins. Like personally, if I just never could ever sell my Bitcoin, I wouldn't care really. Obviously I choose to because I'm a trader. There's some Bitcoin I never sell, but a lot of it I trade with. But also, if I could just, someone said, you can never sell Bitcoin. You can sell everything else. You can short, you can long, but you have to just hold Bitcoin forever. I'm like, cool, let me hold it forever. It's more like about altcoins, because every time Bitcoin dies, or air quotes, Bitcoin's never going to die, but the narrative will be, oh, Bitcoin goes here, oh, it's dead again. Altcoins do die, right? When Bitcoin died here, so did Axie Infinity, which was the most hype coin at the end of the cycle. So when Bitcoin done all this absolute dying at the exact same time, Axie died, except Bitcoin didn't die, even though it went way lower than anybody could have ever imagined. Axie did die and is still dead. Okay? There's Bitcoin's death, air quotes. Here's Axie's actual death. That's the biggest risk. The biggest risk is that if you're holding these volatile dog shit coins, which they are, pretty much all of them. I don't know, maybe there's some that are good. The next few years will tell us. But most altcoins are shit. And if Bitcoin goes lower, the alts also go lower, but the alts tend to never come back. That's the biggest risk. And you have to let go of this whole, I need to hold this thing, I can't sell it, it's below break even, I'll sell when it gets back to break even. It's not. Look, think way more about risk and less about reward, and you'll be a better trader. I wish I learned that in my first 2 years of trading. Would have saved me a lot of money. That's it, GM. That wasn't even trade of the day. That was like fucking trade of the next 9 months. Anyway, I'll keep you updated in trading analysis. See you later on the live streams. GM.